Hey folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Monday, April 25th, 2016. Well, folks, I want to talk a little bit about what's going on this week. This is a huge week for action. Big events coming out, mainly earnings, but we also have the Federal Reserve as well as the GDP number. So let's start tomorrow after the bell. Tuesday after the bell, Apple will report earnings. Now, interestingly enough, Apple's fallen over the last week or so into the daily 50 moving average. Now, the reason why Apple has fallen into this earnings report tomorrow after the close is because everyone is hearing rumors they're going to miss their iPhone sales numbers. All right, well, as a trader, as an investor, when I hear that and I see price selling off into that, I start to think the opposite. I start to think, wait a minute, they're factoring in a poor iPhone number. So therefore, if it is a poor iPhone number, the price is already reflecting that in the stock. Therefore, what if they come out a little bit better? So I would rate Apple going into earnings off the 50 MA here, technical support right here. I'd rate it neutral to positive. I think it wouldn't shock me to see Apple up, $3 to $5 on earnings. It would not. Okay? Now, what we see the next day is going to be the big event of the week. I know you think that Apple earnings are probably the biggest thing, but believe it or not, we have the FOMC policy statement, the Federal Reserve announcing on Wednesday, and this comes out at 2 o'clock. And what the people, investors, public are going to be looking for is what do they say in terms of implying interest rates in the future. Now, no one's expecting, and they won't raise interest rates on Wednesday. They just won't. All right, they've choreographed that. They never shock the market like that. Janet Yellen, Bernanke, they never like to do that. So the question is, at their next meeting after this coming meeting, what do they do? Now, in my opinion, the GDP number on Thursday morning, which is coming out, so the Fed reports Wednesday at 2 p.m., right? Thursday at 8:30 a.m. Eastern Time, before the market opens, we're supposed to get the GDP number. Now, that GDP number, you can bet your bottom dollar the Federal Reserve knows it going into the decision on Wednesday. So they're already going to know that number, and what they say is going to be based off of that GDP number as well as other things. Okay, so we'll kind of see how it plays here, but ultimately expect that FOMC statement on Wednesday for people to view it as investors and traders. They're going to view it as, okay, well, this is because the GDP number is this and all these other factors. Now, I think they're going to be a little bit more hawkish because the economic data lately has not been poor. Jobs still over 200,000 a month being created. The global picture is actually starting to improve slightly. We saw some better than expected China numbers recently. So it wouldn't be surprising if the Fed became a little bit more hawkish. Now, that could be a negative for the market. The market loves free money, cheap money. That's why the stock market is up. If the stock market starts thinking the interest rates are going to go higher, it's likely to see some selling pressure. So I'm in the camp that it wouldn't be shocking to see a little bit of selling pressure off the Fed on Wednesday. Then Wednesday after the close, we get Facebook earnings. Let's take a look at Facebook's chart here. Now, Facebook to me is a very bearish pattern. Here's a sharp move, and this was all inside bar action, inside of this bigger move down. Then you fell here, and now you've kind of gone sideways, making a bearish pattern again on top of the 50. So I'm actually negative on Facebook's earnings. I think you could see some weakness. I wouldn't be shocked to see Facebook hit at least 101, this 200 MA, and I actually think that it wouldn't shock me to see over the next couple weeks Facebook get down to about the gap fill here at 94.5. And again, this is based off the technical chart pattern. All right, much different in my opinion than Apple. Apple sold off pretty sharp straight down. Facebook sold off a little bit and now is kind of flagging, which is a bearish pattern, and therefore I have to respect that pattern and think that you could see some selling on Facebook on earnings. Lastly, on Thursday after the close, we get Amazon. Now, Amazon has had a tremendous rally off these lows. The stock hit a low of around 475. It hit a high recently around 635. I mean, think about that, 475 to $635. I mean, that's incredible. Percentage-wise, that's incredible. Now, what should scare investors is that this move here, even though you're kind of going up, look at how many days it took for it to recover, not even the whole move down, just like 2/3 of the move. That is a bearish, what we call a bearish inside bar pattern. And if we go to the weekly chart, you can even see it better. I mean, this is a bearish pattern, folks. This is extremely bearish. So I'm negative on Amazon going into earnings on Thursday. I mean, maybe some price action ahead of that changes it, but really, at this stage of the game, this weekly chart is very, very bearish. I would not be surprised to see if Amazon fell $50, $40 on earnings. I would not be shocked on that at all. All right, so take it for what it's worth. This is just me analyzing charts. I don't take these positions ahead of earnings. I never like to buy something just for earnings because there's way too much risk. Yeah, sure, I might have odds favoring me by even 70%, to the win side. But if you're wrong, 30% of the time, that move could be pretty substantial in the opposite direction. So it's a little too much risk for my type of blood, But I do like to analyze and kind of give people an idea to how to read the charts, because you can read the charts whether earnings are coming out or not. You can read the chart regardless and analyze it accordingly and be right. And if you don't have earnings, then you don't have the same risk involved, and the reward obviously is just as good. So I like to go in that direction, but interesting to see this. And again, this week, remember, guys, Apple Tuesday after the bell, Wednesday 2 p.m. Federal Reserve FOMC statement, Thursday morning GDP number, Thursday after the close we get Amazon. And remember, Facebook is Wednesday after the close. So I mean, there's just a ton of stuff going on here. All right, guys. Again, just wanted to keep you guys fully versed, fully informed. Join us here at InTheMoneyStocks.com. Trades constantly going out. We're just banking money left and right here. Just recently, I put out a short on oil via the DWTI, and we're just killing that already. Just a beautiful bounce today on the DWTI, up about 6% today. Also, dust. We bought some dust, and we're already in the money very nicely, almost 10% on this one as well. So listen, bottom line is, I don't care if the markets are the quietest volume today. If you look at the spiders, right? Spiders, incredibly light volume today. If we go back to the intraday, look at this, 49 million with less than 30 minutes to go in the trading day. But bottom line is, doesn't matter. There are trades that you can find in anything here, and that's what we're doing, and our members are booking good, solid profits almost daily. Take care.